Advisor is very pleased once again to welcome Pavle Sabic, Head of Market Development at S&P Global Market Intelligence. So happy to have you with us today.
Great to be here.
We have a lot to talk about today, a lot of uncertainty and uncharted waters. Let's talk about Brexit and also the election with Trump becoming president.
So I think I would characterize this year very much as the year of controversy and the year of uncertainty. Not many people thought that the Brexit was going to happen in June. And it did. And the markets went down for that, but they did recover. Now, when you have something like the elections, which almost turned into a bit of a soap opera and got so many people's attention, it's going to be interesting to see how the markets change from that standpoint. And the underlying fact that's very interesting is that Donald Trump has said that he wants to stop monopolistic plays with major companies. So how's that going to affect, M&A, corporate development going forward? That's really the big question.
There was so much uncertainty following Brexit, and then the situation stabilized a little bit. Do you think that's sort of the same thing that we might see here in the U.S.? I mean, although he won the election, there is so much uncertainty, and there might be instability as far as the markets worldwide.
Yeah, I think so. I think we're probably going to have a long period of instability and uncertainty, and a lot of that has been almost procrastination in terms of how corporates have reacted to that. On one hand, there has been procrastination. On the other, we saw October, which was one of the biggest months for M&A in a very long time. British American Tobacco said they're going to buy Reynolds. That was a huge deal, and I think there may be a bit of kind of thinking towards the lines of, well, let's try and get some deals under the table started already, because we don't know what's going to happen in the future and how things are going to change.
Let's talk a little bit about Brexit right now and the timetable.
Article 50, that's the big question. When is that going to be issued? And it does look like it's going to happen in the early parts of next year, but then you have to remember that 2 years after that would be officially when the UK would be removed from EU. And it's how that's going to be negotiated. And I think what really needs to be looked at is what happens in the interim. What's going to happen to the trade agreements? What's going to happen to international trade while these diplomats are trying to figure out the exact terms of the exit? And I think there has to be a lot more focus on that, as opposed to, ultimately in 2019, do you want to be in or out of the EU? So I think in the interim, there needs to be almost a task force established to try and figure that out.
Well, you raise a great point. So what is happening right now in terms of UK investors investing outside of the UK and vice versa?
Yeah, great point. So investing into UK is down 16% from January to October. We've also seen that UK companies, in terms of their the deal size of foreign companies buying into UK companies, has gone down by about 18%. The one thing that is a bit of a silver lining is this British American Tobacco, which increased the deal value, the average deal value of this year. But that was only because of that one deal. If you strip that one out, then it actually would have gone down 6% as well. And in terms of overall global markets, we're kind of seeing 4 billion. 4 trillion in terms of overall M&A volume last year. That's a very tough number to beat, let alone meet. And we've seen about 2.8 trillion this year. So it's not a bad year at all. It's not exactly falling off a cliff, but it's not not jumping to the high heavens.
It's definitely not a bad year to be in your line of work. We analyze all of this data and give advice so people can make intelligent decisions.
That's true. I think that maybe I was fortunate about that indeed.
What makes your company stand apart in that respect?
Well, I think it really is the fact that we have so much data, and it's how do we use that data to provide it to our clients so they can make their decisions. And I think a lot of the time, my job kind of comes down to, if I was to be brutally honest, is to make people think with this data and say, hey, are we doing the right thing? And what kind of analysis can we do? And I think that's what really stands out from other competitors, is that really we're trying to listen to our clients, listen to the market, and really give them the data to make those informed decisions.
Something I thought was really interesting is the gender survey that your
Right.
company did. It was
Right,
really,
right.
times they are changing.
Yeah.
What were your findings?
So glad you raised that, actually. Yeah. So and I think during the elections, the gender gap didn't actually go towards Clinton, which a lot of people thought that it would. But we essentially, being a part of S&P, said we really need to look at a comprehensive study of the last 2 decades of the gender gap within S&P 500 and S&P Euro 350. And what we found was that the gender gap is closing, but not at a huge rate. So we are seeing more female CEOs in blue chip companies than we ever have before. And that's being led more by S&P 500 companies than S&P Euro 350, which was very, very good to see. The 10 years was around about 2 years difference, which again, in terms of the opportunity cost, in terms of salary economically, that's quite significant considering the amount of salary that these CEOs receive. And really, it was the IT sector that was leading that charge with the more female CEOs in IT, and probably to do with the fact that it's one of the most innovative sectors.
Fascinating data, and we're definitely on the right track. Pavle, it is always an honor to have you here.
An absolute pleasure.
Insight. Thank you so much for joining us today.
Thank you very much.